Welcome to today's video lecture on how to prepare various ledger accounts in the ledger book. In my first lecture, I was discussing how to prepare journal entries in the journal book using golden rules of accounting. This is a lecture continuation for the previous lecture. In this lecture, I would like to explain how to prepare various ledger accounts using journal entries. This is an example where first I have prepared journal book. In the journal book I have written various journal entries using golden rules of accounting. 5 transactions, I have written 5 journal entries. After preparing of these journal entries in the journal book, I have identified 6 accounts. How I have identified these 6 accounts, I'll explain. The first entry is cash account debit to Ram's capital account. In this we need to prepare first cash account, and second account is Ram's capital account, and the second entry is furniture account. Cash account is already available, so no need to prepare cash account again. Machinery account, Kiran account, rent account. Cash account is already available, no need to prepare cash account again. So we need to avoid the duplication. The basic idea of preparing of the ledger account is all the similar kind of transactions are recorded at one place. So that is the reason we will not prepare the duplication of account again. So according to these 5 entries, we need to prepare 6 ledger accounts. So we need to prepare individual ledger accounts. This is a pro forma for ledger account. Date column, particulars, LF, JF, amount rupees. Date, particulars, JF, amount rupees. So left side we should write debit, right side we should write credit. So whenever we are writing debit side we should start with a 2, and while we are writing credit side we should start with by. So first one is, with the help of the journal entries we need to prepare ledger book. The first entry is cash account debit to Ram's capital account. The first account is cash account, the second account is Ram's capital account. So go to ledger book. We have opened cash account as the first account, and the second account is Ram's capital account. According to this journal entry, cash account is first account. So go to cash account, debit side we should write to Ram's capital account. After this posting process, go to Ram's capital account, credit side we should write as by cash account. The reason for posting this journal entry into 2 times is we are following double entry system of accounting. According to double entry system of accounting, if one account is debited, the another account is subsequently credited. So first account is cash account. In cash account, on 1st April 2019, we should write to Ram's capital account. The amount is 50,000 rupees. In cash account, we have to write to Ram's capital account. The amount is 50,000. So go to Ram's capital account. The second account is Ram's capital account. Credit side, we should write as by cash account. The amount is 50,000. So each entry we have to post 2 times. So the simplest way is, what is the first account is in this entry? Cash account. So go to cash account, debit side we should write to Ram's capital account. So already we have written debit side. Second time we have to show credit side. Under the Ram's capital account, credit side we should write by cash account. The second entry is furniture account debit to cash account. So go to furniture account. Debit side we should write as to cash account. Amount is 3000. So go to cash account. Credit side we should write by furniture account. Amount is 3000. The third one is machinery account debit to Kiran account. So go to machinery account. Debit side we should write to Kiran account. Amount is 40,000. So go to Kiran account. Credit side we should write by machinery account. And last entry is rent account debit to cash account. So go to rent account. Debit side we should write to cash account. Go to rent account. Debit side by putting the date on 5th April 2019. Rent account debit to cash account. To cash account we should write. So again go to cash account. The first account is cash account. Credit side by putting the date 5th April 2019 by rent account. Amount is 5000. So this is a way we need to transfer the journal entries into various ledger accounts. So we have transferred all these journal entries into various ledger accounts. After this process, we need to go to individual ledger accounts and we need to balance the ledger account, individual ledger accounts by showing balance carried down and balance brought down. So first account is cash account. In cash account, debit side only we have debit side 50,000, but credit side only 8,000 rupees available. 3,000 plus 5,000, 8,000. So by comparing these two balances, debit side 50,000, credit side only 8,000 available. So debit side balance is higher than credit side balance. Usually cash account shows debit side balance because cash account shows the positive balance, so it shows only debit side balance. So debit side amount 50,000, the same amount we have to enter here, same amount we have to show credit side. From 50,000 rupees we need to subtract 8,000. 50,000 minus 8,000 will get 42,000. So what is the difference? How much balance is higher in the debit side as compared to credit side? 42,000. So this is closing balance. So at the end of the month ending in the month of April we have 30 days. So by the end of the April, as on 30th April 2019, 42,000 rupees cash available in the business account. So this is closing balance. So closing balance we should write as carry down only. So by balance carry down. So this closing balance should be transferable to next month as opening balance. So after April we'll get May. So as on May 1st 2019, the opening balance we should write as to balance brought down. The same balance is brought down to next month, that is 42,000 rupees. Similarly, Ram's capital account also, there is no debit balance in the Ram's capital account. Only credit side 50,000 available. So 50,000 rupees we have to show here. Same amount we have to transfer here. We can imagine that this is 0. There is no balance means 0. So 50,000 minus 0, 50,000. This is closing balance, means we should write to balance carry down. As on 30th April 2019, the closing balance under the Ram's capital account is 50,000. So this is carry forward to next month on May 1st 2019 by balance brought on 50,000. Similarly, furniture account. Furniture is an asset and which shows debit side balance only. So debit side only 3,000 available. So this 3,000 rupees we are showing here, same 3,000, and there is no credit side balance 0. So 3,000 we have to enter. This is closing balance by balance carry down. This is again carry forward to next month to balance brought down 3,000. And machinery account, machinery is an asset and which shows debit side balance only. Debit side 40,000 available, credit side 0. So same balance we need to show credit side as closing balance by balance carry down. and this will be carry forward to next month to balance brought down 40,000. Next one, Kiran account, and there is no debit side balance here, 0. Credit side 40,000 available. 40,000 is closing balance, that is to balance carried down as on 30th April 2019. This is carry forward to next month, April 1st, May 1st 2019 to balance brought down 40,000. The last account is rent account. Rent is an expense which shows debit side balance, so there is no credit side balance here. The amount is 5,000. So the same amount we need to show here as a balance carried down, closing balance, and as on 30th April 2019, closing balance is 5,000. This is carry forward to next month, that is May 1st 2019 to balance brought down 5,000. So likewise we need to balance individual ledger accounts. Then after this process we need to prepare the trial balance using the balance brought down. Like with the help of the balances, we need to ledger balances, we need to prepare the trial balance. So how many accounts we have identified using journal book? 6. So we have opened 6 ledger accounts and we have balanced all these ledger accounts. So first is cash account, which is showing debit side balance only. So under the trial balance we need to show debit side only. One more technique is that where the balance brought down is available, this is opening balance. So balance brought down, which side the balance brought down is available? Under the cash account, debit side only. So it means cash account, this is the pro forma for the trial balance, serial number, particulars, debit rupees, credit rupees. So first account, cash account, and the balance brought down is available debit side only according to ledger account. So balance brought down is available debit side only, 42,000 rupees we have to show debit side only. So second ledger is Ram's capital account, where the balance brought down is available credit side only. So Ram's capital account we need to show credit side. So third one is furniture account, where the balance brought down is available debit side. So 3,000 rupees we need to show debit side. Then machinery account, where the balance brought down is available debit side only. How much? 40,000. 40,000. Next one, Kiran account, where the balance brought down is available credit side. How much? 40,000. So 40,000 we need to show here. Finally, rent account, where the balance brought down is available debit side only. How much? 5,000. So debit side 5,000 we need to show. After this we need to total this value and this value, and we'll get equal value. So this is about the trial balance. So in the next lecture we will discuss how to prepare the trial balance using the formula. So this is the end of the today's lecture.